Hi everybody, Ken Heinz here, HFR President with the HFR 500 September Performance Snapshot. September was another volatile month for financial markets, with equities and fixed income extending declines as they have through most of the year. The one trend that emerged as a powerful driver of performance, more so than prior months, is the long US dollar trade. Because the US is raising interest rates so much, the dollar is gained, and in the month of September posted strong gains against commodity currencies, Japanese yen, euro, and the British pound sterling. For the month, the HFR 500 posted a decline overall, although macro strategies, in particular quantitative trend following macro strategies, posted strong gains for the month. And this is really a consistent trend that we've seen in prior months, where diversifying strategies, diversifying hedge fund strategies have posted strong gains, those primarily macro and a few others, but primarily macro strategies, whereas strategies that institutions invest in to reduce their equity market beta continued to outperform the declines of US equities. As I mentioned in the prior slide, macro hedge funds, the HFR 500 macro, posted a gain in the month of September of about 2.75%. That obviously inversely correlated with the decline of 10.5% for the NASDAQ composite. Certainly the Dow Jones and S&P were down in a similar manner. Fixed income based strategies posted a decline of about 1%, about 1.5% for the overall composite, and you can see that higher beta strategies, event driven and equity hedge, posted larger declines. But the trend with macro has been one that has been consistent throughout the year, and that was really driven by a sub-strategy of macro that we've talked about a number of times on these videos, which is quantitative trend following CTA strategies, and how they really posted strong performance in the month of September, as they have throughout the year for that. Continuing from the prior slide, drilling down one level deeper with regard to September performance, you can see that the leading areas of sub-strategy performance are pretty concentrated in macro sub-strategies, although we do also have some equity and relative value in there as well. Leading the sub-strategy performance in September is the quantitative trend following CTA strategies, which gained about 4.4%. And while these gains occurred across different asset classes, including short fixed income and short equities, the primary driver in the month of September was really long the dollar, and that long dollar being against short sterling, euro, yen, and other commodity currencies. The equity hedge energy basic materials also posted a gain of about 4.3%. That's been a strong performing index as well, even as equities have been as volatile as they have in the first 3 quarters of the year. A gain of 1.5% for the macro multi-strategy. That includes trend following quantitative strategies, as well as fundamental discretionary thematic, as well as currency and commodity. All of those sort of rolled into one sub-strategy, gain of 1.5% there. Also gaining 1.5 HFR 500 relative value volatility strategies. As you know, these are funds that trade volatility as an asset class, and we certainly had plenty of volatility in the month of August and September. And then finally, we have the HFR 500 commodity index, which gained about 65 basis points for the month. And again, a strong month overall in terms of sub-strategies and outperformance of the steep declines of US equities. As I mentioned earlier, a lot of the trends that we saw in September were really accelerations of trends that have been drivers of performance throughout the year 2022 and through the first 3 quarters of 2022. The leading area of performance, 17.5% gain for the HFR 500 macro index. This is displaying a historical negative correlation with equities. The highest outperformance of equity market declines that we have seen since inception of HFR indices is the disparity between the HFR 500 macro up 17.5% and the decline of NASDAQ composite down 32.5%. That nearly 50% gain is the highest outperformance that we've ever seen in terms of that type of outperformance through the first 3 quarters of the year. interest rate sensitive area of the industry, HFR 500 relative value index is really essentially flat for the year. We have it down 0.25% of a base, 24 basis points, 0.25% on the year, and that's the most highly interest rate sensitive strategies, which are investing in fixed income and fixed income arbitrage strategies. Overall composite down a little over 4%. That includes obviously the gains or the flat performance in macro and relative value, and the declines in the higher beta strategies that investors will invest in to outperform and to reduce their equity market beta. You see those here as event driven and equity hedge down 9 and 15% respectively. Finally, drilling down a level deeper and looking at the first 3 quarters of 2022, we see that the leading areas of performance in the sub-strategy level, again, really haven't changed for most of the year. It's been a consistent trend. Top area of performance for the first 3 quarters, HFR 500 macro commodity. This is up nearly 44%. The CTAs and the quantitative trend following strategies, these have gained 22.7%. The equity hedge, I mentioned earlier that's been a consistent area performer even when energy's been volatile, equity's been volatile. 17.7% gain for the energy-based materials index, 13.8% for the relative value volatility, and then macro multi-strategy. So interesting that the year-to-date leading areas of sub-strategy performance, again, all of those well ahead of the decline of U.S. equities. Again, here we show the NASDAQ composite 32.4, others down as well. But the leading area of performance for the year is almost the same as the leading area of performance for the month of September. So we really have seen a continuation, acceleration, a lot of the same trends that have driven performance throughout the year. There's a lot of great information on the Investable HFR 500 and all of the investable indices that HFR operates on our website. So please visit the website, www.hfr.com. When you get there, please click on the link for the Investor Guidebook. The Investor Guidebook really outlines how a lot of institutions are looking at using the HFR 500 as a solution to common benchmarking challenges that they do face. And the biggest one of those is getting away from use of theoretical benchmarks or non-investable benchmarks, things like LIBOR plus an arbitrary spread. Very difficult to use, especially in times like we have right now. So please download the Investor Guidebook, and then if you have any questions or you can email me questions or arrange a call if you want to discuss anything there. If you're watching this video, you know that we do regular performance updates on YouTube, so please continue to watch those, and please subscribe to the channel so that we also are aware of who is subscribing. Please, if you'd like to set up a call with myself, you can email me, Ken Heinz, or any HFR contact that you have, or you can send an email to HFR500@hfr.com. Thanks, and I look forward to speaking with you next month.